Hello, welcome to Investing with Zach. In today's video, I would like to go over the largest holding in my portfolio. This SCHD fund takes up 90% of my portfolio just because I believe strongly in the companies that are held within the ETF, and I believe that they will grow throughout time, and I want to collect dividends. That way I don't have to work forever. And everything that I say in this video is for entertainment purposes only, is not financial advice. So let's jump into it. I currently have $25,000 thereabout of SCHD, which accounts for 328 shares. My average price is $75.79. So the market's actually down today. The reason why this is up is because I recently purchased around $10,000 more of SCHD. And I was curious, just doing some research about this ETF for further research. And a lot of investors say invest in the S&P 500. The S&P 500 grows around 7 to 10% a year. It's safe. Typically, past performance doesn't account for future performance, but it gives you like a good view on how it's grown throughout the years. So I found this on Morningstar, and this compares the SCHD and SPX, which is the S&P 500. And I was looking at the growth of these. Even if you go year to date, it's kind of crazy how good of a fund SCHD has been in the past. Like I said, that doesn't mean it'll be a great ETF for the future, but I believe in the companies. When you go all the way back, this is in 2011. So since 2011, the way that these the indexes have been, I'm not really sure if this accounts for dividends reinvested either. But if you started out with $10,000, this is the growth that you would have today. So you would be at $41,241.79 if you invested all of it into SCHD, whereas you would be at $34,461 if you invested $10,000 in SPY, or SPX, sorry. And let's look at the year growth. It's more or less the same thing. Here, around September of last year, the S&P 500 was beating SCHD, but just slowly SCHD just grew back in and now has a pretty substantial lead, around $1,600. I just thought that was interesting. So if we jump into the Schwab website here, we'll scroll back up to the top. So currently it is at 76.96, which I believe there's a lot of growth ahead, so I'm not really worried about the down today. And the reason why I also like this fund is due to the low, super low expense ratio of 0.06%. And the index that it follows is the Dow Jones US Dividend 100 Index. And let's actually look that up just to see, because SCHD hasn't been around too long. Nope, not that. I was going to see if I could pull that up. Let's go back here. So that's the index that it actually tracks, and there's 320 million shares outstanding. And this is also the Schwab website, so all this stuff is up to date and everything. So the 30-day SEC yield is 2.89%. And if we look at the performance as well, here we have the performance since inception. That looks, right here. So SCHD since inception per year, it's around 15.56%. That also takes into account the massive year that it had last year of 52%. We can't expect gains like that every year. But 15.5% throughout the years of it. It's kind of hard to turn that down. We'll keep on scrolling down here. So yeah, this is comparing it here. So this is the worst year of worst returns, was obviously the start of the pandemic. I mean, that every company got hit there. Now can I find... Okay, so here's the companies, and this is also updated quarterly. So these companies are bumped back down to 4%. I believe that's the cap of the percent of assets that a company can have at the start of every quarter. So it has companies like Home Depot, IBM, Pfizer, Cisco, Amgen, Pepsi, BlackRock, Texas Instruments, 3M, and Coca-Cola. For the most part, these are all companies that people use every day. If we look here at the bigger picture of the fund, I mean, there's companies like Verizon, Broadcom, Lockheed Martin, Kimberly-Clark, and these are all awesome companies that pay a dividend. And if we look here at the sectors of the portfolio, so it has 20.77% in information technology and 20.77% in financials, which I believe is really good, just due to the fact you can get some growth from the technology names in the ETF, and also the financials around the start of the year really just kicked it into a high gear and started growing crazy. So you have consumer staples at 14.5, industrials at 14.3, healthcare at 12.15, consumer discretionary. I would like to see consumer discretionary a little bit higher, but you can't really complain just by the way this is just how the ETF is structured. And here's the dividends for the ETF. And we can just look. So the total distributions, for example, for March 24th was the ex-dividend date. So you got paid on March 29th, and it was 50 cents per share, which is, I would say, a pretty good amount per share. And we can go all the way back. You can just see the growth. So starting in 2011, it was 12 cents. And you can just see how it just grows throughout time. And also, here's a little bit easier of a way to look at it. So last year, I believe they paid around $2 per share. And we can look here at Seeking Alpha. Seeking Alpha is an awesome website. Not affiliated with them, but it's an awesome website to do a little bit of research about companies and ETFs that you're looking to purchase. So the 5-year growth rate of the dividend of SCHD is 12.2%, and they've had 3 years straight of dividend growth, which I believe that this year will be the 4th. So I'm interested to see if they can increase this number over time, but 10% is the number that I would like to keep it above. And we can look here at the dividend growth. We can go back 10 years as well. And this is, it says it for itself, just the up and to the right trend is what you want to see when it comes to dividend growth. And that's what we have here. So it starts way back here in 2010 at 12 cents. I believe the fund might have just came in the fourth quarter there. But 81 cents, 90 cents, $1, $5, $1.15. And it just goes up and up and up and up to where last year it paid $2.03. So I was pretty close there. Can I see stuff here at the dividend history? Yeah. So this 60 cent here in December of last year might have been like a company paying a special dividend. Not really sure why that one was so much higher than the first quarter of this year, but I would say it would stick around this 50 cent per share throughout this year. And also, when you're investing in an ETF like this, if one company does go under, you have the safety of having all of the other companies in the ETF. And I believe there's 104 companies inside of this ETF. 103, sorry. So 103 companies inside this ETF. So you're diversified and you don't have the risk of single stocks, which personally I do not like, even though I am a younger investor. I don't really like seeing my portfolio swing back and forth, up and down, up and down. It's not really for me. I tried it. I tried investing single stocks, tried trading options, stuff like that, and it just wasn't for me. So now I've changed the way I look, and I want to be more long-term, hold ETFs, some single stocks maybe for the long term. That way I can reap the benefits of share appreciation and also dividend growth, which I believe will be awesome when I plan to retire. But that's all for today's video. If you guys enjoyed, drop by the M1 Finance and use my link here. This will be posted in the description. If you haven't created an account, go create one, and you'll get so once you deposit $100 and invest it, you'll receive $30. And once that happens, I'll actually receive $30 as well. And it would mean a lot if you guys were able to use this. If not, I completely understand. But thank you for stopping by for the first video. Look forward to seeing you in the next.